Yeah, so we're going to have a good, exciting session today with Jay, Leor, Richard, and Abel. Sorry, Albin. Yeah, Abel couldn't make it. Albin. And we're going to cover some topics around what does it really take to kind of go from a POC to an actual production use case when it comes to digital assets uh, custody. We have a great panel of experts, quite technical. I think I realized when we were having some conversations, so it's going to be super cool. I'll first begin by asking Leor on over the next 5 to 10 years, more like forward-looking. What kind of technology innovations do we expect to drive new use cases of self-custody and institutional custody for banks, financial institutions, and crypto institutions as well?
All right, so yeah, thank you for having me. I'm Lior Lamesh, co-founder and CEO at GK8, fully owned by Galaxy. So I think in order to answer this question, first, it's important to understand what the market is looking for. And I think what the market is looking for is trust, right? What we've seen in the past years is that billions of dollars are being stolen from different financial institutions that don't manage the risk properly, right? We've seen this among different crypto exchanges at the early days, and now we see this more and more in more traditional institutions. Only earlier this year, we've seen large exchanges such as Wazirix, one of the largest Indian exchanges, being hacked for over $200 million when they used multi-sig technology. We've seen DMM, one of the largest Japanese exchanges, were hacked for over $300 million when they use cold storage. And we also seen a few years ago, Liquid, one of another Japanese exchanges, they were hacked for over $90 million when they used MPC. So forward-looking, I think the market is looking for trust. In order to achieve this trust, we need to be able to make people that don't speak the Bitcoin language and not technology people, people like our parents, to be able to trust blockchain and cryptocurrencies. And in order to do so, we need to increase the level of the technology to manage the risk and to manage the private keys. So for example, at GK8, we created a new security category called impenetrable vault, which means that beyond hot wallet, warm wallet, and cold wallet, when it comes to cold wallets today, all of the cold wallets are at some point connected to the internet in order to create a transaction. And with our patented technology, which is the impenetrable vault, we can make the full process of creating, signing, and sending transactions without ever receiving input from the internet. So we are not exposed to any cybersecurity attack vector, and it's impossible to steal funds from cybersecurity perspective when you do custody with impenetrable vault. So this kind of technology, we believe, should forward the future for holding digital assets among institutions.
Dollars being lost and ways of managing private keys, a new category in itself is what you've created, impenetrable custody, right? It's exciting to hear about that. Maybe we can start with Albin first, a quick small intro, and then we go on how kind of BitGo is looking forward to this next 5-10 years in terms of the innovations for exactly the problems that Leon highlighted.
Yeah, sure. Thanks. First of all, thanks for having me. My name is Albin. I'm a sales director at BitGo. I focus a lot on Singapore and Australian markets and based in Singapore. So just an intro, quick intro, BitGo is a security-first wallet infrastructure provider. It's a very long-worded response of saying we provide wallets to institutional investors. We're actually one of the longest-standing custodian in the world today and one of the biggest in terms of assets under custody. And just to respond back to the question with regards to some of the innovations that we think, at least from a BitGo's perspective, that we feel is needed. Actually, just building on what Leon mentioned earlier, I think trust is obviously a big point, but we also feel that liquidity is actually quite fragmented. I think if we take a step back and look at what a lot of the banks and the FIs, I think a lot of the earlier panels I've heard them mention about tokenization is quite a big bit as well. At least from a custody point of view, we're trying to solve a lot of the financing problems, right? Because essentially a lot of our clients, yes, they hold a lot of crypto with us. Nowadays, they're asking for what else they can do with the cryptocurrencies, right? Whether it's generating yield, whether they want to trade. So I think these are some stuff that we are looking to overlay on top of what we're doing currently on top of custody. Obviously, bearing in mind that we want to do it in a very safe manner as well. So I think just in terms of, just to touch some things that we are focusing on, we are big on Prime right now. Whether it's trading, unlocking liquidity, we're big on staking right now. We balloon our assets under stake. Well, I would say 2-3 years ago, we had 0 assets stake, and today we have about a third of our assets that's staked for right now, as well as our Prime for borrow lending. So unlocking liquidity. I think these are some areas that we're currently looking at in terms of how do we propel the next step of custody forward.
Hello, great. So you're talking about liquidity, staking, extra value creation layers on top as innovation on the base layer of providing the enterprise custody. So Richard, on to you now. I mean,
you stole my answer. So I'm Richard. I'm a sales director from Ripple. And for those of you that don't know who Ripple are, we are kind of the leader in enterprise blockchain solutions. And really our goal is to try and transform how the world moves, manages, tokenizes, and stores value. Ultimately we want to try and move value the way that the internet moves information today. And I agree with both what Leo and Albin said. I think in terms of the innovations, I don't want to get too much into, like, if you're either offering the technology solution that sits underneath a custodian or you're a custodian, like, secure infrastructure is pretty much table stakes. Like, if you don't have that, you probably shouldn't be doing this. I think what it's about is building a little bit more on your point around where the innovations, I think, are going to come around things like interoperability. I don't mean interoperability between chains, but between things like networks and how those layers build on one another. And it's something that we see quite often with our clients from the custody perspective. And to be clear, we're a technology provider that would sit underneath, the likes of HSBC, Zodia, DBS. But the demands that they now want are around kind of connectivity. So it's, okay, they could go and build connectivity into certain additional things like chain forensics or staking, but it's now becoming the point that they're actually coming to us for it and saying, can you build these integrations? Can you provide all of this connectivity? Can you provide all those layers? And I think that's where we'll actually start to see kind of a lot of the innovations from that technical side. And again, there's a lot of custodians like BitGo and Zodia as an example that are offering out now such a wide suite of products and offerings and solutions, but that still has to come at that foundational level. And that's really where the innovation comes. And it's, again, building those layers on top that I think are critical, and it's something that we're doing at Ripple. So, we've got a global payments network. We're launching a stable coin. We've got the XRP ledger. Like, what does a world look like when all of that becomes interconnected and you can access it all through sort of one platform? So that's kind of where we see it going.
Yeah, so technological innovations, and I'm looking at Jay Prakash from Silence Laboratories, and I think they kind of focus a lot on really going into the nitty-gritties of some of this technology at the back end and actually powering up some of these providers in the market as well. So Jay, would you like to kind of quickly introduce and take a jab at this?
Hello, hi, I'm Jay, CEO and co-founder of Silence Lab. We are an applied cryptography company. We build protocols for digital assets security. In terms of innovation, what we believe is there are 2 aspects. One is trust and another is usability. Trust, we believe, can't be solved using obscure implementations. So we really champion open source development, at least for the core protocols, be it whatever we are using, whether MPC protocols, multisig or whatever. There should be a standardization which is happening. NIST is working heavily on it. And then we have to at least guarantee that whatever we are claiming actually is readable by anybody who can go on internet and read. And there has to be no obscurity-based implementation. And then we should be able to provide very easy migration, and that needs innovation. Like we can migrate currently from DBS to OCB storing in the bank. Similarly, we should be able to migrate between different custody providers. Currently, it's super hard. It takes a day or so to migrate. Although we are trying to balance security and usability, but migration at the same time should be possible and easy. That's one aspect which will add to usability. And then another layer is that you have to provide all spectrums of solutions, whether it is single-party, multi-party, or different flavors of policies, where there are innovations lying out there for bigger uses.
Certainly, transparency and portability is the key when it comes to these security protocols in terms of building the trust from where we started on your point, right? It's all about building the trust. So what's the technology? Moving on. So maybe I kind of ask, with the increasing focus on security, it's a perfect segue. What's the role of multi-signature wallets, HSMs, and MPC in the custody landscape? How do you see these technologies evolving? Are there successors to these technologies, or are these like still yet to be mainstreamed?
Yeah, so first of all, just quickly to Richard's words, I fully agree that all of the functionalities and services that could be offered on the infrastructure are extremely important. But I think right now, especially with the topic of this panel, when we see that the regulation become more mature and more banks are getting from POC stages into production stages, the most crucial point should be the security, right? Because eventually, blockchain is irreversible protocol, right? Once a transaction is taking place, there is no way back, there is no way to reverse transactions. And I think that banks more looking at the initial stages to work with basic services, even just buy and hold Bitcoin and Ethereum, right? And I think we should stick to the basis and see how we solve this problem first. Obviously, the custody side of things is the building block, right? The private keys management is the building block, and everything that you offer should be based on that. So obviously, also GK8, I didn't introduce the company ourselves at the beginning, but it's being used for not only custody, but also for tokenization, staking, DeFi, and I think it's a problem that all of the vendors solved so far. And for your point, so eventually, in order to explain it, I want to explain how hacker thinks, okay? Hacking is a business, right? How much hackers will invest to compromise into a bank? It depends how much you can get. It's about ROI, and hackers will invest millions to steal billions. And at least based on my experience, I used to work before founding the company in 2018 in the Israeli Prime Minister's office. I was part of a team that protected the strategic assets of the country from cybersecurity attacks. And the metric we always use is that around $1 million is what hackers need to invest in order to compromise one public internet-connected computer. So when it comes to multi-signature or multi-party computation solutions, eventually what hackers need to do is to invest like $2-3 million to compromise 2-3 different internet-connected computers, and then you can earn way more than that, right? So it's all about ROI, and there should be an approach to tackle that. So for example, at GK8, along with the impenetrable vault, we come with a patented MPC proprietary algorithm that we built, which is called UMPC. It stands for Unlimited MPC. The value proposition is that we know how to split the private key of the MPC into large number of shards without impacting the performance. So in our case, for hackers, instead of compromise only 2 or 3 internet-connected computers, they will have to compromise like tens, right? So it increased the level of security without impacting the usability. And the needed risk-based approach is pairing the impenetrable vault to manage the majority of the assets more for the long-term custody, while using the MPC for the day-to-day usage, which by itself is more secure, and that's how you can achieve both security and usability.
Thanks for spicing it up. I agree with you. If the enterprise custody problem is not solved, you started off by talking about billions and millions of dollars being kind of lost on these exchanges. We read about them. Then what are we really talking about in terms of the other layers of innovation and value creation on top? It's about focusing on the basics first, get the basics right. That's what all these institutions are looking for. Would you guys want to take a jab and kind of like to respond on that?
Sure. I mean, I wasn't disagreeing with what you said, Leo. My point was that like the security bit is foundational and table stakes, and like if you don't have that kind of as the starting point, then you've got nothing to build on. It unlocks the custody piece. You know, as sexy as this topic is the foundation for like everything else to build on top. And the way that you described kind of your MPC sharding, you're describing it from like a technical perspective, but I look at it from a slightly different angle. For me, that's like an operational security piece. So everybody always wants to talk about the tech and say, well, is it MPC, is it HSM, is it this? Now, it's important for sure, but if you look at a lot of compromises or like hacks that have happened, it's not always been, or not necessarily been that it's like the technology itself that's been compromised. It's normally been someone that's like, I don't know, systems will have like a super admin and someone's phished them and they've gone in, changed policies internally and then moved assets, it's not necessarily, as I said, that someone's like hacked a HSM or an MPC solution. So that kind of operational governance and how you, the types of internal policies, internal frameworks, internal operational procedures that you put in place are probably equally, I don't want to say if not more important than the security piece, but they're definitely on par and should not be neglected. And I think if we look at how the industry's evolved over the last 5 years, I think initially it was a little bit like, oh yeah, you know, security's like good enough, policies, yeah, we've got some stuff on transactions, but because of things that have happened, the market's had to mature naturally. And a lot of those organizations that thought like that, it was very like move fast and break things. They did. They moved fast and they broke things, and now they don't exist. So it's a little bit like getting the adults in the room as well and going, okay, like you need security, table stakes. You need the operational governance side of things. And that's, I think, how we kind of, you know, keep things secure and where they are.
I couldn't agree more with that, right?
Finally, we agree on something.
Good job. No, I couldn't agree more with that. Obviously, the policy engine on top of the actual cryptography is extremely important. I think for multinational organizations such as banks, right, they need to be able to operate and to work remotely and efficiency and to meet different compliance requirements. So no doubt that it's extremely important. Mark my words, let's take a look in a few years forward, when the state-level hackers that realize that blockchain is irreversible protocol, when it's easier to lose the track since there is no match between any address to any people on the other side, they will take advantage of how positive the ROI in order to do so. And that's why I think that on top of the policy, which is, I think, very important, especially in the POC stages, so banks are get used on how to use the product and how to operate, then that's what will be at the end. And I think they should get prepared sooner rather than later with that.
So honeypot, for sure, is what enterprise custody is when it comes to these hackers getting the ROI. And I think you bring a great point there on operational governance and processes. Albin, policy engines is like one of the most mature pieces of BitGo, if I understand from our interactions. Would you like to kind of highlight what kind of such security postures have you kind of recommended with some of the biggest multi-institutions that you've actually implemented BitGo product?
Yeah, sure. For us, I would think about more how do we empower our clients to design the policies that they want to, right? So maybe take a step back. In BitGo, we actually started off using multi-sig way back in 2013. In fact, I think our founders were actually pioneered the multi-sig back then, 2013. Now, obviously, the company's evolved now. We've taken demands from our clients, and we actually rolled out MPC, you know, some of our partners on the panel here as well. So the unique thing about us, we actually deploy a combination of multi-sig and MPC coupled with HSMs, right? And then we sort of give the clients to decide what kind of security protocol they want to use. For example, like if they go to Ethereum, they want to create a wallet, they can choose, right? Do you want multi-sig or do you want MPC? Obviously, for the more savvy ones, they get into more technical security questions, and I think that's where we can get into more details. But at the end of the day, we want to give the power back to our clients to decide how they want to do that. Now, on the policy side of things, I think we made it also quite similar, which is quite fungible, where you can actually design your wallet architecture and frameworks, right? So we define on two main levels. One's on the user level, where you can actually grant user roles on an individual basis. And then subsequently, you then design what the policies should look like for the users, which I think should be quite standard across most custody products. But we do see a spectrum, right? Whether you're coming from an asset manager from a TradFi space, or you're a crypto trading company doing HFT firms, doing HFT on a frequent basis, the type of governance they deploy is actually quite different, depending on who you speak to. But yeah.
Super interesting. So, I mean, policy engines, processes enabling a security posture. So, I will probably take it to you, Jay. I mean, what kind of, beyond the regular security protocols. Would you have a take on some of these processes in terms of innovation? How do you see that happening in the industry?
I'm audible? Yeah, like Lior said, there have been innovations happening around where people are sharding keys to multiple pieces and, and then doing distribution for redundancy so that they can provide more better policy players. That's happening. But it's all function of use cases. There's a very nice study by a professor at Technion, and he does economics-based game theoretic analysis on how many key shares are optimal. And he concludes that 2 out of 3 is very optimal if you're providing a custody solution. Because if you increase to a more number, and then there's a delegation on the custody provider itself, there's a probability of collusion happening. So we need to invest time on anti-collusion key shares as well. That we see there are innovations happening in that space as well. So there's no silver bullet. It's all up to the use cases which we have to cater to. What use case, what people we are serving, retail or enterprise, and then we have to design the solution accordingly. All are in pretty mature state, all the protocols. It's just about picking right and mixing them together.
So how do you cater to the variety of customers and create a common denominator of most critical features when you kind of get into the product roadmap? It's not that easy to kind of cater variety because you also want to win more businesses in terms of your market sizing of your usability of product across industry. So how do you really approach this? Would you be able to share a little bit?
Yeah, so I think, there are, I would say, different stakeholders. On the one end, you see from strategic perspective where you want to take the product according to the market dynamic, but eventually you always have to be, to hear your clients, to hear their needs, and to make sure you fill any gaps that they might have. I think that in addition to policy engine, which is extremely important to have in place, we see more and more need for granular way to work with large number of different chains. It become more and more bottleneck since it might take like months for the vendor to develop support in order to be able to work with new chain and then enable new businesses. The way that we tackled it is that we created what we call a universal asset engine, which means that we have general layer that you can add support to any EVM compatible chain without the need to wait for us to develop it and to spend months, which we see stuff like that in other vendors. In addition, we have general layer of support in any layer 2, any smart contract on top of this EVM, where you can literally just add the smart contracts and the functions of the smart contract that you want to work with. It's like a one-time process of a minute. And from this moment and on, you can continue to work without the need to wait for the vendor. But I think in addition to the actual feature, if we take one step back, since there are still regulation issues to work with cryptocurrencies, I think one of the main things that we see this day is the need for tokenization, right? So at GK8, we develop a tokenization wizard. We enable to our clients to create their own token, their own smart contract within a configuration page without the need to write any code, within like a minute or so, and deploy directly to the blockchain based on the same impenetrable and UMPC technology that I mentioned before, fully secure. And then the access to the smart contract of the token with, to do the superpowered function, that's how I call minting, burning, proxy, can be done extremely securely as well. So I think that's one of the main things, while also, one point, while also, since part of the banks in certain regions cannot even hold crypto, what we do here is we leverage the partnership that we have with Galaxy, our parent company, that, for example, if a bank wants to work with token but cannot hold the crypto to pay the gas fee for the token, then when they send a transaction, we send them crypto to their account, and it's like a bundled transaction that Galaxy, with their node validator business, they bundle it together, and in the same block, they settle the crypto fee and also insert the transaction. Just as an example, and we're doing it already in a very interesting project called All Unity. It's a partnership we have with Deutsche Bank, DWS, of a fully regulated Euro stablecoin, where we provide the full technology infrastructure to do so.
Richard, what's your take on this one? I think.
Yeah, I don't disagree with Leo. And I think it'd be unusual if any of us up here said that we don't listen to what our clients want. It's obviously always going to be quite a big driver for how you develop and the things that you start to build. I can sympathize with what Leo said about kind of, people always want the latest chain, they always want the latest token. I think sometimes it's just like keeping up can be quite a challenge for everybody. And then if I look at kind of a lot of the history of taking a bit of a step back, and I know we're short of time, but I was previously with a company called Medico, which Ripple actually bought, so it was part of an acquisition. And if I look at how kind of our solutions evolved from when I first started at Medico to where we are now, it's kind of vastly different. And again, a lot of that's driven by, we've been really fortunate to work with some really interesting companies that have helped kind of push us as well. So Zodia, Arcax, HSBC, all of these people have very different kind of client demands, and that it makes you be better as well. And they're the ones that help to drive the innovation, because they're kind of telling you, look, we want this, we're seeing this in the market, whether it's simple things like integration with a travel rules solution. Like when we first started, that wasn't something that we ever really thought about. It was like, oh, well, we can, we've got partners that you can work with on that. But now, again, it's kind of table stakes for all of these things. And this is kind of going back to my previous comment. This is where a lot of that innovation's moving forward from. And if you take the topic from POC to kind of production, you can simulate a lot of these things in a POC. Like you don't even necessarily need to connect to a key management solution. You can like kind of spoof it. You can simulate what it would look like. Yeah, but when you go to production, that's when things change, right? So again, it's using it as a bit of a test bed to then get right as you kind of go into full production.
So Albin, what would you say the time from sandbox, POC to production is typically what you've been seeing? I mean, you can anonymize and kind of share some ballpark figures for the people to know what does it really take to kind of go from that transition.
Wow, I've seen POCs that have gone for years and then pause and then resume back again. I've seen POCs that's like gone through 2-3 months and gone live. And I would say it really depends on the company actually, right? Because essentially a lot of these firms, they potentially have a mandate that, oh, I want to have sort of like a day zero product out, right? With potentially sort of certain mandates that they want to tackle, right? Whether it's offering wallets to the clients or whether it's NFTs, I think that sort of defines the timeline, right? Because then a lot of these firms that get down into very complex stage of realizing that not one single solution can fit to exactly what they're looking for. I think that inhibits them a little bit. So I rather answer in a way that if a firm or company has a good idea on what the day zero looks like, what day one looks like, what day two looks like, and then in that sense they can go to a solution or find some type of solution they can address for day zero, and then try to answer as to, is this partner someone that I can work with to address my day one, right? And then day two is hopefully you can sort of in-house everything within the whole firm itself, and obviously you just cater the timeline according to that. But back to the question, I've seen wide spectrums. I've seen companies that the whole crypto team have, sort of done and gone to other projects away from crypto as well. So
definitely goes back to expectation setting of day zero, day one, day two, and also kind of the regulatory region you're talking about, because it could be a function of the complexities in that region and also maturity of the institution to be able to embark on that point. So
not sure if we have time, but yeah, from the regulatory perspective, there are obviously a lot of things that should be changed from the POC to production. Eventually, as the regulation continues to evolve, there are new and new requirements around how you hold and manage the private keys. For example, in some countries, such as in Japan, Thailand, you need to hold at least 95% of your assets within cold storage, right? And then the question coming back to how you define cold storage. Should it be really cold, or like the impenetrable that I mentioned before, or where the private keys are actually has to be stored on-premise, on cloud, or like a dedicated environment per client rather than multi-tenancy, which cannot be the case in a lot of the situation in different regulators. So yeah, it makes things more complicated, and you should be, as a vendor, be available enough and flexible enough to adapt yourself to these needs.
Super passionate answers today. We probably can take one question from the audience if you would like to ask a pressing question that you might have in mind. Why funds get hacked on enterprise custody? I think we just finished the panel. Any questions? Okay, great. So I think we had an awesome panel. Thank you so much. Really, I would say impressive points that you kind of guys emphasized on. Thank you so much, guys.